How are you, Don? Great to meet you.
Yeah, thank you very much, Dale. It's good to be here.
Okay, so you were recommended by Alexander, and do you want to share your screen or turn your camera on? How do you want to handle this Zoom interview?
I, I
You're my
can do
guest.
whatever works for you.
All right, let's go with some cameras, and let's have you share your screen because Alexander said that I'd be amazed at, do you still do your charts by hand?
I used to do those in the years back. Trust me.
Oh, okay.
The old,
I was
no, no,
wondering.
no.
Okay. I did.
Figured charts back in the day, and the whole office
Yeah.
wall was like all like it looked like wallpaper. So,
Commodity perspective. I would
oh my
drag it
gosh,
with me,
yes,
Don. Don,
that
I'd
used to come
drag
out
it with me. It would have all my meals on it because I'd have it, bring it to lunch. It had ketchup on it
You are
and
so right.
mustard.
That
Yeah.
was
My friends
amazing.
would say when I was cold in the market, you know what they say to me, those mean friends of mine? Dale, why don't you turn your charts upside down? Huh? So sometimes we have to do that. So,
I tell you,
you
Dale, it's
know,
almost as bad as when we used to call the brokers to place our orders, right?
yeah,
And I would be in a drawdown period. It was almost like, I'd call the broker up and normally it was like instantly you get the fill, right? Because he had
yeah,
a phone to both ears.
right.
But when I was in a drawdown, it was almost like he was putting his hand over the phone going, Dawson's going long bonds, short them.
Yeah, okay, I know you. Yeah, yeah, persecution come. That the market got me. So, we evolved and we realized the market doesn't care one way or the other. And we learned to take responsibilities for, blowing up our accounts or taking big hits. And, really that's how we learn. I'm interested, Don, that did you always know you wanted to be involved in the markets? What led you into this industry?
It's ironic. I never thought I was going to know. My whole family, no one really has an investing background. So when I got into it, I was the black sheep of the family. And then to top it all off, I got into commodities instead of stocks. So that made it even
Right.
more of a gambler. So matter of fact,
Yeah.
I had a Series 3 broker's license back then. I got that just to learn what about the markets are, because back in the 80s,
Right.
there was no schools. So I said, I'll get my Series 3. I was never a broker, but I just got it. My dad didn't even know what a broker was. So he used to introduce me to his friends as, oh, that's my son. He's a bookie, kind of like that, which in the long run, I realized maybe I am. But
That's
anyway,
great, Don.
I
Yeah.
when I got into it, it was really I got a sort of little bit of a blue collar background, and I needed some construction home, custom home building and stuff like that before I got into it in my 20s and stuff. And it was really just by accident. And one of my dad's friends was getting ready to retire, and his neighbor came up to him and said, "You need to start putting some money in the stock market, to get ready for retirement." And so he was trying to explain that to me. So I'm in my 20s, right? He says, well, you buy something here, and if it goes up to here, you sell it and you make money. And I said, and that's all you got to do. And I said, you're telling a 20-year-old this, it's all of a sudden, it's like I'm in love.
Yeah.
So
Yeah.
anyway, I just sort of got hooked on it. And I went to something, I don't know if you guys remember something called a library. I used to go there and
Yeah.
get books,
I
real
remember.
books, and come bring them home and read. Edwards and McGee's book on the
The
stock
Bible.
market. Oh my
The
gosh.
Bible.
Reading those,
Yeah.
they were already 100 years old when I'm reading
That
them.
was my first book.
Yeah.
I took a course at the Merck, and that's what they use as their textbook on
Yeah.
Edwards and McGee.
That's
And
funny.
gosh, in the FX world, I sure miss gaps.
Oh
And
man.
the old days when the market would actually close and we didn't have to think about it for at least 12 hours, right? And
Well, that was true. Yeah. That's
yeah,
why we had to
so
have limit moves in the markets because of those type of things,
yeah,
right? So people could go home and come back a little bit more rational the next day.
oh, look, I remember those pools building up in the belly pit.
Oh man. Oh no.
Yeah,
My first limit move ever against me was in the pork bellies.
that
So,
was the wild pit when I was a runner on the floor.
oh, I can
And
imagine.
that's where the big money guys were. So
Yeah.
I'm assuming you're like me. I mean, you're self-taught.
Yeah. Oh, it was. That was a 5-year self-taught. And, I taught at a school for about 15 years. And, these people come out and pay all this money to take a class. And, kind of come in there thinking they're going to get like the holy grail in a week. Right. And I tell them, I
Right.
said, hey, hang on a second. I said, let me tell you, it took me 5 years before I could pull the trigger and say, I can do this. It was about 4, but it took me that extra year to really say, okay, I can now sort of pull the umbilical cord away from the regular job. And,
Yeah.
it took a long time, and to
Yeah.
this day,
It's
I'm
still
still learning.
it's Yeah, yeah. I mean,
35.
you know, and the answer you gave, uh, I've done quite a few of these, well over 1,000, and I asked people how long it took to make a breakthrough. Think that you really understood, and you
Yeah,
had a method that, or maybe a go-to formation that you could count on using. Most say 4 years,
yeah,
and why should it be any different? I mean, if you want to be an electrician, you start off as an apprentice
I totally agree.
and then a journeyman.
Hmm.
So, I mean, everything's a process. Most people don't have the patience to wait with themselves to
Right.
wait that long to do it. So, um, yeah, it took you that long. What were your influences besides Edwards and McGee?
I think my first one was Tom Baldwin in the Bond Pit
Oh,
in
okay,
Chicago.
yeah.
He was such a relatively like an introvert, but reading about his book in the Market Wizards, he was just not a big fan of interviews. But when they finally got him cornered and did a little
Yeah,
interview with
Jack
him,
could do that.
yeah, and believe it or not, it was like on St. Patrick's Day, and he was sitting there looking at his watch because being Irish, he was ready to hit the bar,
Yeah, yeah.
whatever. So
Sign of
he
the
was like, "Okay,
traitor
hurry up with
across
this
the
thing."
street.
But
Yeah,
he just brought some things out, and one of the things that really stuck with me was he asked me, he goes, "What do retail traders? What's one of their biggest mistakes they make?" And he said they personalize losses. And by that, what he meant was he says, when you have a loss, let's say, because remember in the 30-year bond, which I started out trading that thing, I don't know why, I had a small account and I'm trading the $31.25 tick market, right? So it's
right.
anyway, I'm trading that. But he was pointing out that when you have like when you take 8 ticks in that market, that's $250 loss. 16 ticks, then you get out to old handle. Now you're talking $1,000. So anyway, you take a 16 tick loss, $500, just like that on one contract, and the market was moving around pretty good. But what he would say, or what he said was, a retail trader would take that and say, "Oh man, that's a boat payment. Oh, that was a car." And this is back in the day. Today it's
Right.
$4,000 for those, right? But
Yeah.
$500, that was a lot of money. But when you personalize it like that, the pain and the scar that it creates was so bad. And so I started thinking to myself, I was like, how can I get away from personalizing, thinking I'm trading money? And what I did is I came up
Yeah.
with this idea of, I took my account size and divided it by $31.25, and that's how many bond ticks I had. So I was married back then. My wife, she was a CPA, and we used to go. I told her what I wanted to do, and she said, "That makes sense." So we go to dinner, and she says, "Let me see that." And she looked at the receipt. She got 3
How
bond
many
ticks, kind
ticks?
of like that. So we did that, and to be honest with you, it took some of that emotion went away. Like if you had a bad day or something, and
Yeah.
like he would come home and go, the usual, "How was your day?" And
Yeah.
instead of saying I was down 750 or I was up 250 or whatever, I would say,
Right.
"Wow, 8 ticks or down 12," something like that for the day. And it
Wow.
really took a lot of the pain away in the beginning. So that was
Yeah.
one of my hurdles. And that's why I say Tom Baldwin was really good in that interview with that. So
All right. Well, that's look, do you think Vegas knows that you're not betting with cash? They give you chips.
yeah, you got
Then
it.
well, they don't even do that anymore. It's
Yeah.
just your card. It's not real. So, that brings me to something in your trading account. Um, it doesn't feel real.
Mhm.
I knew guys that would have big swings in the morning and we'd walk in 0 degrees to Lou Mitchell's because they have a breakfast special. We could have gone right down to the train station
Yeah.
in Riverside Station, right there, and had breakfast. But no, Lou he had a special, and you needed an accountant to divide up the check. These are guys having 40, 50, $100,000 swings, and that's because that was real money.
Yeah.
Are you a believer that after a windfall, that a trader should take part of that windfall and maybe invest it, diversify away from himself, maybe go buy some coins, or how about
100%.
enjoying it, going on a vacation, and
Yeah.
that makes it real.
Yeah, because that's a very good point to bring up, and that's one thing I always try to encourage people to do is every month at least pay yourself, give yourself something, no matter if it was a bad month or what, but give yourself a little bit of something, because what that does, that just incentivizes you to work for it, and because if you just
Right.
sit there and trade, but you don't ever take anything out, at some point you start going like, why am I doing this, right? So
Right.
it really, I think that's a really good thing to do, is just to reward yourself. Think of the hard work you did. I mean, you did the study, the analysis, analysis and the emotional stress that you went through while you were putting that trade on, come on, let's go. And you got to take something out of the market. There's got to be a reward in there somewhere. Otherwise, you're not going to follow through with it. Remember, you're talking about you've got to have patience with yourself. And, if you don't have that patience, for one, you got to have passion in this business. If you don't love what you're doing, this is no place for you to be. But if you have that passion, that adds to your patience because you can see a future in this. So again, but you got to reward yourself to be able to really, truly see that future. So I agree. Yeah.
Your examples, Don, are that it's all in our head. So we could have the greatest methodology, right?
Yep.
We could have all the tools.
Yeah.
And if our paradigm, and people have problems with their paradigm, I'll share one of mine. Okay, I always had a hard time sitting until my objective on a trade.
Mm-hmm.
And my paradigm was, in my childhood, my mother who raised us was always worried about money. So when I had wasn't easy to raise four on her own. And so when I have a profit, it's hard for me to risk the profit. It was hard for me to risk the profit instead of taking it. And it still is. But I found a way to overcome it by taking partial profits. And, and even going in, I don't go all in anymore. I haven't for many years. So having patience with myself, but rewarding myself by taking a partial profit when I have it, tightening up the stop and letting it work.
I agree with you on that one. And for me, that was one of the things somebody asked me, so kind of hit broadside at me one time. It was a former student and would just send me an email and was asking me about, if you were to tell somebody, a younger you, what would you do different today? And I kind of like, oh man, that's a good one. But I think the first thing that really popped in my head was patience, and in the sense of patience to wait for the setup. Okay, you have a strategy, but having the patience to wait for it to execute the trade, right? And that is so important to get, is because if you don't have that patience, I tell people when I was in my 20s trading, it was like I just shoot at anything, buy it, sell it, like that. Because I thought that's what trading was. My broker loved me. I'm paying him $40 paying $40 round turn for a professional courtesy discount too, right? But anyway, I was trading way too much, and as I've gotten older, more conservative in my trading, I have got such strict rules. It's almost like it's on a lockdown of my strategy is, and if it doesn't meet those rules, there's no trade. And because I just realized there's why I don't trade it, for the adrenaline. That's not something you want to do. If I want excitement, I go out here and do something in the evening or something, but if trading is not that place, it really is. If you're trying to build capital, you really got to have patience and wait for something. And same thing when I do an all in on my trades, but I love to scale out. And for me, it's like when I can get that first 1 to 1.5 top profit target, for example, I can leave my stop where it originally was now. And I have to trade in equal units. But the whole point is I can leave that stop at that original place now until it can turn into a decent trail stop. But if it comes back and stops me out, I'm still making a half on that trade, or half of my risk. Does that make sense? So it's like a trade. Yeah, once I get to 1.5, it's amazing how much
you want to pull risk off the table as soon as possible.
You want to take the bulk of it off, exactly. And when I
doesn't that give you longevity because it kind of de-stresses the whole process by taking partials.
And the thing is too, and the other thing, I've gotten away from day trading. I used to do that years ago. I thought if you can imagine, and you remember, I tried to day trade off of the floor, phoning orders in. Now it's taking me 10 minutes to get an order from my broker into the floor, and here the guy on the floor is going buy, sell. I'm going like, I'm trying to compete with that. Forget it. So anyways, over the years, I realized, and now today it's the algorithms. I can't compete with them guys who want a short time frame. So for me, and there are some great day traders out there. It just, for me, it doesn't work. So I'm more of a swing trader where I put trades on and I try and hold them for, my goal is 3 to 10 trading days. So and once I get to a free trade, which my 1 to 1.5, everything goes into a daily chart trailing stop, and that's where I want to stay at. The other
since we're on stops, do you believe there are stop hunts? My handle's Forex Stop Hunter.
I'm sure there is, especially with the algorithms and stuff out there.
You're on the floor.
I used,
Didn't you hear the roar every time they ran through the buy and sell stops
yeah. Well, I
on the
remember
floor?
from the when we used to get the in the bond pit, they had that what that thing, what was it called? The squawk box that was on there.
Yeah, yeah, yeah.
And it used to crack me up because you could stand there and you could hear on days when you could hear newspapers turning in the pit and there was no noise, you never put a market order in on that day because you were going to get skinned. But what was ironic was occasionally you'd hear somebody just sort of squeak out to go like, hey, what was that C period high? Hey, what was that G period low? You know, that kind of thing. And all that was the market, the traders wanted to go up there and take out a
Yeah.
high or a low. And there's nothing wrong with that because if you really
No.
think about what is a market, any market we trade, Forex, equities, or it's an organism that eats orders to survive, right? Because
I
if the
like it.
market can't
Yeah.
find orders, it'll starve to death. And if it can't find orders, the exchanges don't make money, traders don't make money. It's so that's why,
They're magnets.
yeah, old highs, old lows must be taken out to
So what do you
facilitate
tell
trade.
people that put their stops right above
Oh,
and right below swing highs and swing lows? Do you
well,
tell them to let their stops breathe and give it maybe a 1-day ATR above
you've
that
got, if
level?
you exactly, if you do not give that market room above those highs and lows, because you can bet at least 8 to 9 times out of
Just
10.
happened in silver, Don,
Yes.
about a
Oh,
month ago.
good grief. So, excuse me. Silver is probably one of the wackiest markets. I mean, it's so volatile. I mean, 5,000 ounces, that's a lot of silver in there. And so there's a lot of panic in there when people are on the wrong side of that trade. There's a lot of them GMO orders, get me out. So
Yeah.
because there's a lot of pain coming in there. So no, I agree with you on that one. It's that putting a stop above a high or a low, you have to have some reason of how far you know, a logical reason you're putting your stop above a high or a low. I've seen people put 2 and 3 ticks above a high or low. And I said,
Yeah.
you might as well write a check to charity and give it to somebody who can use it because you are going to get
Exactly.
whipped out 8 or 9 times out of your trades every time.
Yeah. Yeah. So Don, you have a view on these markets at all? You want to share anything? You know, you've been watching cycles. You've been through, you know,
Oh,
probably not quite as much as me. You're a young guy to me.
oh, young. Yeah,
So
I've been here for 35 years now. So I've,
yeah,
you know,
I know. Anyway, you still are.
oh yeah, yeah. I don't know.
What
I used to have hair.
what do you think about what's happening here in the first quarter of 2023? You have any narratives that you're working on?
You know,
Any themes that you find yourself
I
gravitating to?
the old days of the old market, and nothing's changed in the market. That's why it cracks me up every time we have a, you know, a new cycle in the market or something new. The people come out and they say, "Oh, this time it's different," or it's a new paradigm, or I just
It might be new for them. When's the
exactly.
last time people lived
Oh,
through? You have to these markets. The closest comparisons,
yeah.
late '70s, right?
Yeah. Yeah. And this is what I like about having this experience is I no longer panic when markets are in a free fall, and I no longer get all giddy when they're going to the moon because I
Just
know
another
I'm going to
move.
keep doing that, right? I'm not going to
Yeah.
try and pick a top or a bottom, but I don't get all emotional thinking, oh, I'm missing this market. I'm missing this trade. Would I like to be in it? Of course. But I've learned over the years, no market goes up and down forever. And, you know, you start to get a little bit more patient that way too, because you're not chasing, you know, every wiggle in the market, or just because your friend is in a market and you're not in it. You got to get over that stuff. You know, this is all about, if you're in this to make money over a long haul, you've got to just pick your market, pick your strategy, and place the trade.
Okay. I want
But
to
I'm just going to mention
show
on as
this.
far as the narrative goes, I've learned over the years that, you know, don't fight the Fed. And, you know, I'm hearing people say that now. And again, I used to give the Fed a lot more, Federal Reserve, I used to give them a lot more credibility because they have missed the last 2 cycles really bad. But
Yeah.
the point is, when Powell's out here hammering down, going, we are not going to start, you know, pausing. We're not going to lower rates, blah, 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 blah. We can't fight that. And the stock market, if you're still thinking that we're going to turn this stock market around,
That paradigm's over.
yeah, that's, you can't think that. I mean, there's too much. During COVID, during that free money coming in, the low 0 interest rates, too much of that mentality of buy the dip, and that works great in that environment. But you got to realize that switch is turned off now. That is not there, and that's when this top came into the market, and we started this correction. Friends used to ask me about, what do you think about the market? What should I do? Blah, blah, boom. And while I don't usually give advice on that, I'll tell them, well, here's what I see. And I said, this time is going to be where the market is not going to be, it's not just the Fed raising rates, but they're also going to be doing that, taking the quantitative easing away and going into the tightening. So that this time we're going to see higher rates, and we're going to see not buying back the long end of the yield curve, if you will. And so this is going to be a double whammy, and this market's going to have to find some way to support itself under that. And it did not disappoint me. I told people, I said, at least a year from this top. And this was back when we started the correction. I said, you've got to give yourself at least a year on this one, and it might be longer. And it looks like we are going to get another year out of this. So it's going to be a 2 year. And it doesn't even have to keep crashing down. These markets can start doing this thing and worry you to death as an investor if you're not careful, because you'll get in there and make the stupidest mistake of selling everything right down near a bottom. So, if you haven't sold now, then you might as well just be like, okay, find a way of just sitting this out. Now, if you need the money within 6 months to a year, you should have been out this a long time ago, and perhaps you might want to consider getting out now, just in case this thing does turn worse than what it already is.
Okay. So Don, you write some nice articles. I tried to show it. Maybe you could. The name of it's Bar Chart, which is a great service. And Don, your titles are great.
Oh, thank you.
I was looking at them. You talk about the root of Aussie is a grain cycle.
Yeah,
and a lot of people don't even they may correlate Aussie with China and copper, but they don't think about it as an agricultural country, which they are.
Yeah, very much so. And I was wondering, I do like trading the Aussie dollar. I don't trade spot Forex, but I do, in the futures market, I like to trade the Aussie dollar. Very good trending market for me.
Yeah.
And if you think of it in the sense of, I trade seasonals a lot in my commodity market. So that to me, two different hemispheres. So of course, when we're in sort of the doldrums in the northern hemisphere, we're not really replenishing any crops in the wintertime. But here you got Australia coming on board, and you got Brazil, Argentina down there as well. But I just like it because with Brazil and Argentina, they're so close to us that anything with exporting is competition directly with the U.S. And that basically because how much it costs to ship anything, right? It's about the same darn price. But you take Australia, which is right there underneath the Pacific Rim, and boy, they can buy that a whole lot cheaper there from transportation standpoint. So I've seen that year over year where the Aussie dollar usually catches that bid coming into their harvest season. And that literally is nothing more than just, converting their currency to Aussie dollar to buy grains for exports. And they do a lot of like iron ore, gold, different metals, stuff like that. So it's not just that, but I like when you get a seasonality in crops, it's so darn predictable. That's what I like about that.
I know a lot of guys looking for a June low across the board in grains. That's their cycle work is what it's pointing to.
A June low in price or a
low.
Ooh, that's for the grain markets. That seems for me, it's counterintuitive because it's like that's the usual hedging season, May, June, especially for like corn and so on. That's usually when the producers coming in there and they're starting to sell that kind of a market. And I don't want to be the one who's predicting a top or anything, but I think we've seen the high in our commodities. Everybody's saying, "Oh no, we got 23 is going to be worse." One thing I've noticed in commodities over the years is when we get these parabolic moves that go up like this to all-time highs, rarely if ever do we keep that momentum going up. And you look at lumber, that was a big failure crash right there.
It sure was.
And wheat is not much different. Look how bad.
How about gold?
And
is there a case for gold? Is there a case for gold, Don?
No, gold is okay for trading it, but this idea of gold going to 10,000 and 15,000, those days are gone. Think about the days when you and I used to trade and we had 4 or 5 markets you could put your money in with any liquidity, right? Today, look at all the different vehicles we have out there to put money in. You got even the cryptos out there now. There's so many different places to put money for diversification. And I think that's taken some of the shine off of gold in that standpoint.
How about Bitcoin? Do you have a view on Bitcoin?
I'm not a fan of cryptos, to be honest with you. So, and probably because I just don't understand them all.
Like me.
Let me put it this way: I just don't trade the darn things because I think it's not a tangible asset in my opinion. So I can't trade something that's not tangible.
Very reflexive.
I can't trade something that's not on a listed exchange, and I can't stand something that doesn't have any regulation in it. So yeah, it's not my part.
Okay. All right. And that's a great point. How about your broker? I remember I always felt more comfortable if my broker was a member of the exchange because the clearinghouse would back up anything that happened at a member. And we don't have that anymore, do we?
I think all the brokers still have to be registered with an FCM,
Yeah,
but which would still
but
be
there were FCMs that that failed.
yeah.
Stobler,
Yeah.
okay, and the exchange, it was a CME that made things good.
Isn't that something? I
Right.
know. Yeah. But
If
they
you were
had
a
to because that was
non-clearing FCM, your funds weren't really that safe.
yeah.
If you
But you look at it today, I mean, nobody, unlike in the equity market, you've got the SIPC, you have insurance in there for up to, $500,000 or whatever it is over there. But we don't have that in the futures market. I mean, your account literally could go away tomorrow and there's really nothing you can do about it, right? Unless there's some, like the CME stepped up once they got as much money back as they could. But the CME stepped up and put the money back into the accounts, and they
Right.
had to, because that was the biggest black eye to the futures industry almost in history. So they had to do that to get the credibility back. So that's
All
what I
right.
do
Well,
about a regulated exchange.
so you survived this interview. You know that you're now my trading warrior brother.
I'm sorry for.
You're my trading warrior brother now.
Oh, well, thank you very much. I appreciate
And
that.
I recommend that people go to barchart.com and check out Don Dawson's columns and his writings. And after a few minutes, if someone knows. And it was great. Jeff, someone was here. Jeff said he missed Sign of the Trader, and he was on the SIBO for 30 years. So people that spend time on the exchange floor, that's kind of a brotherhood, isn't it? And weren't we fortunate to be there instead of what people have to go through to find? We were surrounded by some of the best traders in the world. We didn't have to surf the internet to find, all the, discernment from the charlatans.
Yeah. I think, I think the way we had to come up through learning, doing the charts by hand, for example, was almost a sixth sense to how we picked it up from, because you could feel every day when you were updating your chart with, especially commodity perspective,
NLP,
yeah,
neuro-linguistic programming.
Yeah, it really was. It burned images. You could feel a trending market. You could feel, because you would always curse on commodity perspective, because in a tight consult, like crude oil right now would have been a nightmare putting on a chart, because you're sitting there with a pencil, ripping the paper, putting this little mark, and you're going, and you just know, I can't trade that market. But today with a computer, and the other thing too, was we were focused on a market. Like for me, it was a 30-year bond. I loved interest rates, trading them, and just trading the interest rates, but you got to know everything about that market. Now today, man, we can click on something and be in 30 different markets in the blink of an eye, and this chart just goes whoosh, like that and populates, and you don't feel it no more. But just I don't feel it like I used to.
I know what you mean.
It's just a picture to me. You know what I'm saying? So it takes a little bit more to get that sixth sense in there now to get back into the market. Feeling the market. It
takes time for your trader intuition to build.
Totally agree. Yeah, if you don't have that intuition, that's some people say that's you're trading with emotion, but after time you start to feel and you see patterns in the market, and you can almost go like, I've seen this movie before, and that's how you react to it.
Speaking of intuition, Alexander Perna had great intuition to have me invite you here. He thought it would be a great interview. I really enjoyed talking to you, and it's great to hear a voice of reason.
Oh, well, thank you very much. I appreciate being on your show.
Let's keep in touch and do it again, Don.
Let's do it again soon. I'd love to do that. That'd be
all
great.
Right, Don. Don Dawson, everyone, look for him on barchart.com. No Twitter handle. This guy is all business, and you could tell he loves what he does. It comes across.
Thank you. I do.
All right, Don. Have a great weekend. I'm a fan. I'm rooting for you.
Thanks. Look forward to talking to you again.
All right. Adios.
Thank you.
Thank you, everybody. And you could join the team in 14 minutes on the Morning Edge. Don't just count your pips, count your blessings. Have a great weekend.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.